Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for July 16th through the 20th. It's going to be pretty quick. It's 2 in the morning. We're going to be going out to the lake tomorrow, so I do need to go to bed very quickly. So we're going to go over the four main indexes, go over my portfolio changes for the week, the stock futures going into next week, some stocks that either moved up or down here in the after hours, go over some financials, put them into Y charts, look at their price, yield, 200-day moving average, look at their financials as far as the last 5 years go, see whether some of these are worth investing in at this current time, or just kind of leave them alone for now. Not really sure where financials are heading to. Talk about some stocks, tech stocks in the news such as Amazon, Walmart, Microsoft, IBM, and then kind of end it there, wrap it up and end it there. Try and make this video quick for the week. So if you are brand new to the channel, I do make stock market and investment videos weekly, so consider subscribing for new videos. Otherwise, if you are a subscriber already, thank you guys. Give this video a thumbs up if you do enjoy it, and if you do enjoy it by the end of the video, give it a thumbs up as well. Let's go ahead and get started. So here, last week's recap, we had the S&P 500 moving up by 1.5. Dow Jones moved up nearly 2.5 points. We had a lot of green last week, NASDAQ moving up 1.79. Russell, which is the loser last week, is actually the winner this week. So Russell down 0.41% last week, and my portfolio moving up 1.78% last week. So good growth last week. Going into this week, it's ideal. Took a little bit of a break. President Trump coming out with some tweets that he would like to see less rate hikes, and of course S&P 500 5-day change up 0.02%. Not a lot of change there. 2 out of the 5 days green, but still positive for the week. That's good. So year-to-date change 4.8%. Dow Jones sort of the same thing. Very flat here, 0.15%. For the week, 3 out of the 5 days positive. Year to date, keeping out of the red. That's important there for the Dow Jones, up at 1.37%. The NASDAQ was actually the loser this week. So while the S&P 500 and the Dow Jones were in the positive slightly, the NASDAQ did take a bit of a hit here, losing what looks like, took a dip there on Tuesday morning, but did recover here. Not 100% sure. That could have been financial earnings coming out. Some of their, let's see, what's the NASDAQ? Okay, so it wouldn't have been financials at all. Here, this is the NASDAQ. So not 100% sure what caused the NASDAQ itself to drop down on Tuesday morning. If you guys know, let me know in the comment section below. But it does look like it, recovered really quickly after that midpoint here around 10 a.m. and had continued on that point here for the rest of the week. 5-day change down 0.07%. The Russell 200, Russell 2000 is the winner for the 5-day, up 0.5%. So as you know, last week it went down by 0.41. This week it recovered last week's losses with a little bit of a gain there. So 3 out of the 5 days positive. What do you guys think? So here is the I need to do sort of like a poll. Maybe I'll do this on Facebook in my Facebook group. But who do you think will win as far as year-to-date growth goes? Do you believe that it'll be the NASDAQ or the Russell 2000? I know a lot of investors have been discussing pulling back their markets out of overseas and international stocks and moving more towards national stocks here, such as within the Russell 2000. So let me know in the comment section below, which one do you think will win out towards the end of the year, the NASDAQ or the Russell 2000? So my portfolio changes. Last week we were up by 1.78%. This week only slightly up at 0.15%. I may have a difference of $35 there between all my accounts, so very minimal difference there, but still positive, so it's always a win there. U.S. stock futures, S&P 500, NASDAQ currently looking here in the negative, but this can change on any news here on Saturday and Sunday. As of now, don't know really what to expect on Monday. The dollar was pretty weak on Friday, continuing to be weak. We may see opening here in the lows, but as investors are buying in, could see Monday start off as a green day. Now, most active here, I thought this was interesting. I think Disney's such a great buy. I've seen people kind of compare Disney and Netflix. Netflix, I would not invest in that. I don't subscribe to anything outside of, I don't even own Prime now, but I normally stream a lot of stuff, but I believe Walt Disney, as their acquisition of Fox, was approved. Comcast is no longer going for it. They're going to be aiming towards some other company. Disney's going to get Fox. They're going to be able to produce much more video, films and TV series, which I think that will help them quite a bit coming out of just that value buy. Over the long term, what do you think you'll have more value from buying Netflix? You might get those returns over the next few years or not, over the next few years. But if you were to buy Disney and it's continued dividend growth over, X amount of years, if you have 30 years, I believe you're going to get a better value play out of Walt Disney. Now moving into some of these financials. Financials released some earnings this week. Bank of America beating expectations, of course. They did this last quarter, I believe. Financials did really well last earnings season. Goldman Sachs, JP Morgan, they blasted earnings out of the water, but I believe they both lost right around 3 or 4% during that time frame. Here, on the other hand, earnings did very well, and stocks moved higher. So Bank of America released their earnings there on the day on Monday, moving up by 4.31%. 5-day change up 5.53. Year-to-date coming out of those reds there. So they had a profit of 0.63 per share and had actually shown higher loan growth, lower expenses, and just overall better, moving in a better direction, after their stress tests and all that fun stuff. I believe investors are trying to trust a little bit more into these financials. And if financials move off their lows, we're going to see the S&P 500 also coming out of that staggered position, because we need tech and financials in order to move back into those highs. And who knows what will happen after midterm. Goldman Sachs here, I believe they released earnings here on either Friday or Monday. Monday, it looks like they may have released their earnings as they had an increase here of 2.22%. So don't expect anything less than Goldman Sachs. Let's see if I can see here. Their company posted profits of $5.98 per share, which was higher than their estimate, $4.66. So they beat earnings, they beat revenue, they did it, and they actually moved higher this week in comparison to last week's earnings season where they moved down quite a bit. So 5-day change up 2.33%, still down year to date by 9.06%. This one actually looked, we're going to be taking a look at their Y charts here, but their earnings or their financials don't look as healthy as some of these other ones here. But we'll take a look at that here in just a second. Morgan Stanley also announced some released their earnings here on Wednesday, moving up 2.81%. Now, Morgan Stanley announced that they had had a profit of $1.30 per share in comparison to expectations of $1.11 per share, and also they increased their dividend by a whopping 5 cents to 30 cents. So very nice growth there. I know JP Morgan also had an increase here not too long ago, so we'll take the current one, which is 0.3, subtract it by the past, divide it by the past. Okay, so maybe that's incorrect. Maybe 500% increase. Is that correct? It's 2 in the morning, so my math could be off there. Either way, good job, Morgan Stanley there. After passing the stress test, they relieved some of those not the borders, but the pressure on the financials and let them increase their dividends. They had to have so much cash on hand over the last few years just because they don't want that financial, relapse to happen. So I think they're kind of easing off there. This is the ETF here, financial sector ETF, ticker symbol XLF, also moving higher just on the announcement. I was taking a look at their main holdings here, Berkshire Hathaway being number 1 there. Berkshire Hathaway was on the news either this week sometime that they're doing a share buyback. They hadn't been able to do it in the past, but they're actually able to now. So I think that's really interesting. This could be a good one to kind of jump into. If Berkshire, boy, I cannot talk right now. Berkshire Hathaway moves higher, with this one being the primary holding within it. I think this could be a good financial ETF to kind of hold. It's also down year to date right now, and as financials kind of move off those lows, we might see them do much better here. So I was kind of playing around here on earlier. What we're going to be taking a look at here really quickly is their price, their dividend yield, and their 200-day moving average for the year here. So we can see here Bank of America falling below the 200-day moving average here in early July. If you had bought that at $29, you could have got that at a good buying price where you got a yield on cost of 1.68%. We're going to go through these numbers really quickly and then look at their revenue, net income, and not free cash flow. Not worried about that. Goldman Sachs here for the year down below the 200-day moving average. 231 right now in comparison to 246. But did bottom out again early July. Would have been the optimal time to have bought this. Would have got that yield on cost of a dollar, 1.36% there. Morgan Stanley here, also early July, bottomed out there. Still trading below that 200-day moving average. Still trading right around that yield on cost of 2% or higher. And who was it that increased their dividend? It was Morgan Stanley increased their dividend. Here, let's go ahead and bring in their dividend and see if that's actually on the chart. So here, they increased it from 5 cents, 0.25. They were right around 0.25 to 0.3%. So that makes a lot more sense. Let me fix my calculator here. So new dividend payout is 0.3 minus the old of 0.25. Divide that by the old of 0.25 and multiply it by 100. So that's a 20% increase in their dividend that they recently increased here. So new dividend payout, 30 cents per share. I believe their current yield is not correct. If I were to take this, head over to dividend.com and punch in Morgan Stanley, I believe that their dividend is actually going to be showing here higher, 2.39. Okay, so that is, yeah, 2.39. So this is actually way up here right now. So Morgan Stanley, due to the way that they increased their dividend right now, hey, Coles, thank you very much. Could be an optimal time to buy. You would have been locking in, you'd be locking in that yield of 2.39. And, you know, their financials also looking good, beating expectations, buying it below that 200-day moving average. I think Morgan Stanley is one of the better financial there at the time. JP Morgan currently trading above that 200-day moving average, yield below the 2%, yield below the price in comparison to some of these other ones. So JP Morgan looking like the better of these. No, Morgan Stanley still looking like the better one here, but it is currently trading above that 200-day moving average. Now, what I wanted to show you here is the revenue and net income over the last 5 years for these stocks, and percentages change. So here we can see Bank of America moving up nicely in their net income and in their revenue. Goldman Sachs is actually that unloved child here, moving up very sluggishly on their revenue, and their net income has actually been decreasing here by around 0.46% over the last 5 years. Morgan Stanley here, we have triple digits in their net income and double digits in their revenue. So Morgan Stanley still looking very healthy there. And JP Morgan, double digits in their net income, single digits in their revenue, just kind of slowly moving up here over the last few years. So that's kind of what I wanted to cover there on Y chart. So Amazon, on the news this week, basically just due to Prime Day sales. Monday they had a whole flop with that dog showing up on every single page that you looked on Prime. I didn't do any Prime buys myself. I know a few of my friends went out, bought some new graphics cards, super cheap. I believe there were some 1060 NVIDIA ones, so good purchases on them. They did recover their tech difficulties on Tuesday, and 5-day change at 0.04%. Not sure when we'll see, Amazon not hit new highs every week. I actually expected this one to kind of slow down slightly, but they're doing so much right now that, you'd expect them to kind of slow down a little bit, but they're just doing so much. I just believe Amazon will be one of those ones that maybe beats Apple to hit that $1 trillion market cap. So we shall see. Netflix here. I'm not going to cover Netflix. And they missed their subscriber goal. Stock shot down 14%, recovered 5% the day after. But I think Jeremy had discussed Netflix, or one of the other channels on here talked about Netflix. Not too worried about it myself. So Walmart and Microsoft partnering up to battle against Amazon. So Walmart reached out to Microsoft saying, hey, we'd like to use some of your AI tools and cloud and artificial intelligence tools in order to make it easier, faster, and better for customers. That customer experience. They basically want to work on that. And Amazon, they have their little card. You can just walk through, paste for whatever items you have on hand. I think Walmart's going to try and go towards that. I like to see a combination there when tech and retail work together to make it easier for the customer experience. It's an important thing here. So Microsoft moving higher by 0.8, Walmart moving higher by 0.2. No, I think it was like 0.38. 0.41% here for Walmart. So good changes overall. IBM released some earnings. They moved higher after earnings expectations. I didn't track exactly by how much they beat it, but they're actually moving out. Yeah, I still don't know what IBM does. I'm not really worried about it. If you would give me the option to invest in IBM or Intel, I would always pick Intel over IBM. Intel, you know what they're working on. They're working on new chips, new artificial intelligence, and much more of those tools, whereas IBM, I heard drones at some point and some other items, but just interesting there to kind of see IBM kind of moving off their lows here. So 5-day change at 0.31%, still down year to date. Share builders, home builders cannot talk. So home, we had some announcements of homes. I know here in my market, homes are still up. I believe we had like 20% more offers coming in the month of June than we had in the past year. So year over year, more offers coming in, but people are not willing to offer more. People were shooting for more. If a house was 175, maybe they would offer 185 or 190 in order to lock it in. But right now, people aren't willing to offer more or really overpush, because these prices right now, a lot of them are hitting where they were back in 2007, 2008, prior to that crash. I know that's what made me kind of pull back from buying a house. We had looked at a nice, 5-bedroom, 2-bath, but when I was doing my comparison of what they wanted in comparison to where it sold at and what it was actually worth, what we would have to do to it in order to kind of bring it up to actual market value, carpets, walls, kitchen redone, it wasn't worth what they were asking for the repairs that were needed to be done. So didn't want to do that, took a step back, instead chose to invest in real estate by buying value buy. So doing that whole route. Actually in a contract right now, so hopefully I should close within the week, depending on how my inspections go next week. So may do a couple of videos and pictures of that, kind of share that with you guys if you'd like. So oil moving lower for the week. Let's move back. I was looking at these numbers. So oil down 2.21% here Monday. I know over on Facebook posted that Kramer said that we should buy oil at this time. I don't think this could be a good time to buy oil. We've seen some volatility. June was a great month for oil, moving up nearly 10%. Go over 3 months. They moved up 11% in the month of June off those lows as President Trump was putting restrictions on Iranian oil, asking everyone to kind of back off and just stop using them. July hasn't been doing well. We expected some sort of a pullback in oil, but what was just kind of discussed here on Friday, I believe it was Friday, maybe not Friday, maybe it was Friday. Okay, so the Treasury had actually came back. Let's see here. Not Treasury. Yeah, it was a Treasury. Okay. Treasury came out saying they're going to be laying off some restrictions of the import of Iranian oil despite the sanctions of President Trump. So that's what kind of pulled back. Maybe that was on Monday where that news was coming out at. I know I wrote my notes in here during the week of stuff that was kind of popping off. So oil down there, 2.21%, still year to date, beating all the other indexes here that we covered, the S&P 500, Dow Jones, NASDAQ, and the Russell 2000. Here we have the dollar weakening here throughout the week. President Trump coming out with a tweet on, I believe it was after hours Thursday or Thursday sometime, saying that he would not like to see higher rate hikes coming forward. Basically kind of signaling to the Fed chairman to not do rate hikes here. And I believe they're going to be coming out here in August, November timeframe, somewhere around there. I believe was where the next rate hike was expected to rise by maybe 0.25%. But we will see how that goes. I believe that up until midterms, they're really trying to suppress the dollar, trying to make it less expensive, make it cheaper in order to buy into the stock market, make the stock climbs higher, stock market climb higher, the market itself move higher. So we shall see how that plays out. So here we see the dollar moving down for the week, you can see here, but you would expect silver and gold to increase, but silver and gold continue to decline. Here's the actual article talking about how they are expecting sort of like a support level at $1,200 for gold based off some technical analysis. I don't see it. I think they want investors to be putting their money into the market, making it easier and cheaper. And you have more money laying around now due to tax reform. Companies having more money, paying out their employees a little bit better. So I know there's a lot more financial ed going on about. I know a lot of my friends now talking about financials a little bit more. Not really the stock market. It was the Bitcoin craze, but gold moving down here, 0.89%. Bonds continue to move down here as well. Not terrible. It's not a terrible place to have your money. I like paper bonds just because, I don't like them, I suppose. I sold all mine off. I had 42 of them. I had a video on that just like a month or two ago talking about why I was selling them off and, the whole reasoning behind that. But I had a couple viewers, subscribers reach out to me asking for suggestions on bond ETFs. Bond ETFs, not too bad. I would prefer to buy into a strong dividend growth stock that raises their dividend year after year, regardless of whether the market goes into a correction. If you invest in a consumer staple or, say a company that's used for human resources, ADP or Paychex, if you buy something such as Johnson & Johnson, where those products that are being used are going to be needed regardless of whether we're in a recession or not, those stocks will come out of those lows with time. You'll also have those dividends paid out to you, which are often the same yield as these bonds. Plus, you'll grow your equity. They'll be increasing their dividend payout year after year, even during those down points, buying more of their shares, compounding during that downtime. And then when they come out of those lows, you'll make all of your equity back. You'll have increase, your unit cost would have gone down. Your dividends, they may have done like a stock split. They may do a stock split of 2-for-1. They may double your dividend payout. So I think it's always better to just invest in either a dividend, either single stock dividend paying stocks that are strong even during downturns, or just an ETF that's pertaining to a specific sector that you would really like consumer staples. If you guys look up ticker symbol XLP, that's the consumer staples ETF here. And then bonds stayed the same here, basically kind of continuing to kind of trend sideways. Rates didn't change here. Prime rate still 5.0 in comparison to 1 year ago at 4.25%. So that is basically all I wanted to cover for this video. We're at 22 minutes, so I think we beat our weekly time cap. So that is it for this video. If you guys did enjoy the video, remember to give it a thumbs up below. If you have not yet subscribed, please remember to subscribe for future financial videos. If you have any questions about anything that was covered, if you'd like to see some more content covered on my channel, my current goal outside of YouTube and making content is updating my website. That way you guys can head over to my website. If you guys would like to get started in the stock market, I'll have some documents in order to kind of do your net income, go over with what money you could allocate in order to invest, and go over some steps of getting the mindset of investing, getting something set up for how to invest, where to get started, where to look for information, how to screen specific stocks if you're a dividend investor. Or I'm also trying to write down my notes as far as real estate, my whole process of going out, getting a HELOC, building my LLC, why I chose to build an LLC over just getting an umbrella policy, and the differences between there, why I opened up my account over at Chase over any other financial institution, how I'm working with realtors and screening realtors in different areas, how I'm screening my areas, how I'm working with wholesalers, like the way, how to process a deal with a wholesaler outside of using a realtor. So those are all things I've experienced here over the last 3 or 4 months. So I'm working with other investors and, networking. We're sharing ideas back and forth. It's fun to do this sort of stuff and have people locally that, do the same thing you enjoy. So that is basically it for this video. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself trying to help others make their money work for them. If you guys did enjoy the video content, come back next time. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.